Fiona Boal joins us. She's the global head of commodities at S&P Dow Jones Indices. Fiona, always a pleasure to have you with us, and it's good to have you back. I wanted to begin with the UK numbers attracting some attention this morning. Inflation, CPI to a 10-year high.
Yeah, thanks, Ben. Always great to join you. Yeah, 10-year high in UK inflation, and we're really seeing that in the hip pocket, whether that be energy prices, food prices. And it's really, it's about a recovery following the pandemic, but it's also about these really significant supply chain issues that we're having. And again, specifically around the energy complex.
I wanted to talk about some of those supply chain issues because we actually heard, we've been hearing from the IEA, EIA, and IEA and OPEC, and they were talking most recently yesterday about how basically some of the, they expect prices to come off, not so much from a demand side of things slowing, but from a supply side of things increasing. They predict we'll see some increased production in the near future.
I think there's two trains of thought here. Certainly OPEC seems particularly concerned that we might actually see demand start to come off if we have a third or a fourth wave of COVID cases coming through Europe. The other organisations seem more sure that they think that supply will come back to pre-pandemic levels. But to get that, we've really got to see the US shale oil guys pick up their production. And I'm not sure we are going to see that. We're seeing, the investors in those businesses really focus on debt levels, on paying out dividends, and being much less interested in turning the taps back on.
Fiona, can we talk a little bit about, just real quick, I did want to quote the IEA because they said, again, contrary to hopes expressed recently, this is not because, again, demand is declining, but rather due to rising oil supplies. So they do expect that to increase, and we're going to be watching for it on the U.S. side. Clearly, Biden doesn't seem to think it's going to be increasing. That's why he's asking OPEC to do their part. But let's talk natural gas, because this seems to be where some of the rise in energy prices stems from, the run-up that we had seen earlier this year, and then ultimately the ripple effect as people start to look for other means of energy to kind of fulfill the need there and the gap. Natural gas prices up on this Nord Stream 2, the news that they're not going to get granted the approval for this pipeline. Is that correct?
Yeah, the European energy crisis just keeps going and going. The news yesterday that the German regulator has halted the approval process for the Nord Stream 2 gas pipeline, and that's the pipeline that goes from Russia into Western Europe. And we saw European natural gas prices up 15% yesterday, up again this morning. This is having a massive ripple-on effect to, the big industrial producers in Europe. And, we're seeing, unfortunately, high prices do their job, which is start to curtail demand. But the big concern is what happens through the rest of winter. If it's a particularly cold winter, can Europe really sustain itself on, imported LNG, which is what it's going to need to do.
Yeah, I think you bring up a good point in terms of as far as a cold winter one. That's probably the next question that we have. And then ultimately, as you mentioned here, production on the U.S. side is going to be key. And I guess I'm wondering, where do you see the relief coming from at this point? Or should we just expect this to continue, higher prices? You mentioned again how higher prices do ultimately kind of curtail demand some. That was one of the comments, I think, from OPEC last week. They expect that to be the case. But ultimately, do you see relief coming here, or should we just expect these trends to continue, Fiona?
I think it's realistic to expect that we're going to see the volatility continue. We have to keep an eye on the weather, and that's always difficult to predict. There's huge competition for LNG cargoes coming out of the US, whether that's here in Europe or also, really strong demand coming out of Asia. I think we want to watch and see what governments do. I know the US has, for now decided not to take any oil out of reserves. We see China overnight saying that they might consider it. So something like that would certainly break this higher price cycle. But if we don't see those sort of immediate pickups in supply, I think we should continue to expect to see high prices and maybe more significantly, really, really high volatility.
The great debate about the strategic petroleum reserves. On which side of that do you stand? Are we in a situation with gas prices on the rise? We actually heard from the API yesterday on the close. They said that gas inventories declined again. I mean, with prices on the rise, does it warrant conditions necessary for releasing some of those reserves?
Yeah, obviously, we don't know what the government approach is going to be, but they're going to be looking at things like the general level of inflation, which surely has to be concerning them. Look at monetary policy, how that's going to evolve over the next few months into next year. How they're feeling about the implementation of the infrastructure bill, the move or the desire to move to different types of energy sources. But I imagine the discussions are potentially heated and ongoing in the halls of government.
Speaking of, let's talk a little bit about gold. You mentioned in your notes an inflation hedge. It's certainly spiked in reaction to the CPI. It seemed like without rates on the rise, at an extreme rate at least, they moved higher on the news as well, but without rates really screaming higher right now, but the inflation data coming in stronger than expected, that seemed to give gold a bit of a boost, even amidst and in the face of a very strong U.S. dollar.
Yeah, it did. Look, the S&P GSCI gold's up 4% this month, but it's still down year to date, around 3%. It's really been a laggard, and particularly when you consider how traditionally inflation sensitive it's been. But I think people are probably starting to reassess gold's role in their portfolio. We've seen huge inflows into other inflation sensitive assets. So maybe gold is playing catch up. Although, as you mentioned in the intro with the DXY up through 96, some expectations that we might see rate rises. Neither of those two things are traditionally good for gold.
Definitely something to watch in terms of economic data as far as what we should be keeping an eye on in the coming weeks as far as movers. Inflation, obviously a major focal point, but it seems like the Fed's pretty dialed in on jobs reports as well. Do you look for the next kind of tipping point for some of these markets, these commodities to come from the U.S. side of things, or are you looking globally kind of in terms of trying to gauge some of the demand narrative here? It seems to be, again, recently it's not so much the focus only on the U.S.
I certainly think, what we've seen in energy prices so far this year really shows that interconnectedness of global markets for lots of commodities, particularly the energy complex. So I'll be looking for any signs of movement on the supply side there. In terms of the economic data, clearly inflation is likely to drive things. We want to see either any sign that the rate of inflationary growth is slowing, I think could be a catalyst. And I think that will be across the board, whether we're looking in the developed markets like here in the UK or the US, but also in places like China.
All right, well, we'll continue to watch. Energy is oftentimes a reflection of, and as mentioned, gold on the move higher seems to be an indicator that investors are trying to buy some insurance should we see inflationary pressures continue to play out. Fiona, a great breakdown in terms of what's behind some of these inflationary pressures and the tie to energies. Fiona's the global head of commodities at S&P Dow Jones Indices. Fiona, thanks again. Always a pleasure.